Hi, and welcome to a very special podcast. As you know, Bajaj Finserv Flexi Cap Fund has just completed its first year. So we thought it would be a good time to look at the year gone by and focus on something that the fund is very specifically known for, Megatrend Investing. Now, who better to quiz on everything Megatrends than the man who built this unique strategy, Mr. Nimesh Chandan. Morning, Nimesh.
Morning, hi.
Hey, and thank you for taking the time to speak to us about Megatrends. I've caught you well before the opening bell, so I think we have time on our side, but let's begin. So, Nimesh, if you could tell me, the very basic concept of Megatrends, what's that all about?
Actually, the concept dates as far back as 1982. There was a book by John Naisbitt called Megatrends, and it spoke about how a lot of investors can benefit if they look at the trends happening in Asia and how the Asian tigers would do. And a lot of money actually flowed to Asia at that time, following the trends at that time. So the concept is about 40 years old with a lot of work then being done to refine it further. When I came across Megatrends as a concept, naive that I was, I first thought it's about forecasting a macro for a country and then investing in that. And I'm an Indian investor, so why should I bother about Megatrends?
Right.
But then slowly and steadily, as I researched more about it, I found out that this is not just about one country. It's about the changes that are going on in businesses, economies, and that have an impact on everybody.
That's true.
And there are certain businesses where these megatrends act as a tailwind and help them in growth.
Nice.
And there are certain businesses which are against these megatrends, and they either have to change their business or do something else to survive. So the concept is about forecasting long-term changes in the economy and businesses, and that may not be country specific. In one of the conversations I was having with some of the good investors, we started talking about a topic of buy and hold investing. And to my surprise, all these investors started saying the buy and hold strategy is dead. And got me a bit worried, when we are talking about equity investing, we are talking about buy and hold investing. Then I understood the perspective a little better. They were not against long-term investing.
Right.
But the concern was that because of these trend changes,
Right.
a lot of businesses, the reason that you invest in them, that reason may not survive. So it's better to keep watching these trends and then invest.
Understood.
So what I took away from that was that buy and hold investing has actually turned into buy and watch. You buy for a longer term,
Sure.
but you keep a watch on the important trends impacting businesses to ensure that the reason that you invested in that business stays the same.
Understood. Very interesting. But Nimesh, tell me, you're a fund manager, and this makes a lot of sense. Why should an investor be concerned about megatrends?
That's a very interesting question. If you are a true active long-term investor and you want to pick winners over many decades or many years, it is important to invest on megatrends.
Right.
There are a lot of factors affect a company's stock price. But in the longer run, one of the most important factors is the profit growth of that
Right.
company. And profit growth depends on whether the company is able to capitalize on the opportunity that it has.
Right.
Those opportunities are created by megatrends.
Understood.
If you see from 1995 or 96, when Nifty 50 index came,
Right.
every year, almost there are 4 to 5 changes. So in the first 25 years, they had 104 changes, which means about 4 average a
Yeah.
year. Which are the companies that actually survive through these decades and stay in the index or create wealth over a longer term for investors? You'll invariably find that many of these companies have a strong mega trend backing them, which gives a tailwind to their growth, which ultimately leads to profit growth and wealth creation for the investors.
Interesting. Now that you say that about these companies having a mega trend backing them, in today's day and age, Nimesh, it's very easy to classify anything as a trend, right? What in your mind are the real sources of mega trends?
So that's very interesting. Mega trends need to be longer term. And in fact, mega trends create trends within themselves.
Right.
A short-term move around the average is called a cycle.
Right.
A cycle, when it is in a direction, it becomes a trend.
Right.
A mega trend actually create many cycles and trends within them. So we identified 6 sources of mega trends, and we have put an acronym called TRENDS for
That's it.
like easy recall on that.
Right.
But these 6 sources of trends are technology changes,
Right.
regulatory changes, economic changes, for
Right.
example, changes in standard of living of a
Right.
population, nature or sustainability, which is becoming very important now,
Absolutely.
demographic changes, whether your population is young or aging, and social changes, which actually encompass, say, consumer behavioral changes, that what consumers prefer at one point of time versus the other. So we look at these 6 areas as sources of our mega trends.
Right.
And then we try to map that at this point of time,
Right.
which are the trends we are seeing in each of them.
Right.
So that's how we come to long-term changes.
So tell me, Nimesh, have investors really benefited from investing in megatrends?
Let's take decade by decade some examples. Let's say 1998.
Right.
You had innovations in technology and the telecom industry,
Right.
which made remote working possible. So you can be present as a developer of a software in US versus you can be in India.
Right.
Because of good telecom connectivity, reducing costs, you are able to perform the same function as if you were sitting in the
Right.
client's office in US. So offshoring took off as a new way of software development.
Yeah.
And at that time, the business started moving to countries where you had a large English-speaking population and who could be trained to do this coding, to look at IT development. India at that time
Right.
was the most favorably positioned nation.
That's right.
We had a large demographic benefit,
Right.
large English-speaking population and a young population. And we were able to deliver value to customers in IT
Right.
at a very good value. Now, the changes in technology combined with changes in demographics actually led to a jump in the offshoring business in the country.
Understood.
And offshore outsourcing, obviously, a lot of Indian companies took benefit of that. Large IT companies, if you see, became 10 baggers, 12 baggers over this decade of 1998 to 2008.
That's right.
When the Nifty returns were not much, but you were able to get benefit of the trend changes in one or two particular sectors. Let's take forward from there. From 2008 onwards, India's per capita income started rising very quickly. We crossed $1,000 of per capita income for the first time. Because of changes in the banking sector, you had more data available about the loans that you're giving, about the creditor or
That's
the
right.
credit worthiness of the loans. And that led to improvement in lending standards.
Right.
So regulatory changes, availability of data, and changes in economic front where per capita income started rising led to boom in the retail lending. And you see companies, NBFCs who were on consumer finance or retail finance, banks which were more retail oriented, they had a fantastic growth over that decade between 2008 and 2018.
Absolutely.
And you saw multi-bagger returns from some of these companies which were able to benefit or were on the right side of this megatrend.
Right. Interesting. So how does one really go about constructing a megatrends portfolio?
Well, this is actually interesting. Megatrends actually helps you create a top-down universe
Right.
of companies that have the potential to grow.
Right.
When we screen companies on megatrends, first we identify the megatrends from these 6 sources of TRENDS.
Right.
We overlay each of these trends on each sector.
Okay.
And from these sectors, we find out which are the companies on the right side of the trend and which are the companies on the wrong side of the trend. Clearly, the companies on the right side of the trend have the tailwind for growth,
Right.
are the beneficiaries of changes that are happening in the
Right.
economy and the businesses, and they have the potential to do well.
Understood.
So that's our top-down screening, and that gives us the universe of megatrends. Now, there are many companies where the potential may not necessarily translate into business or profits. So then our team takes over in terms of looking at the bottom-up screening of these companies. How good is the business? How good is the management? Here we look at 4 different points. One, you should be a net beneficiary of the trend. If you are benefiting from one trend, but you are against the other, your business prospects get neutralized or growth prospects get neutralized. So you have to be a net beneficiary. Second, you have to have ability to monetize that trend. If you're providing a product, whether a good or a service, and your customer is not allowing you to make even a single rupee of profit of that, then that business is not worth being in. I'm not saying you ignore companies which go through a investment phase.
Sure.
But in the long run, there should be visibility of monetizing that. The third, then we look at, for capturing that growth, what kind of capital investments will be required, and ultimately what kind of cash flows will that business generate. So it is like doing a financial analysis of that.
Sure.
And last and also the most important step is valuation.
Right.
So here we get 2 things from Megatrends investing style. Valuations tell you whether the crowd has already discounted that trend. So if you know about the hype cycle, right? That many a times people get excited about a technology change or so, and they pay exorbitant amount for that stock. Now, we want to avoid overpaying for that trend. So we look for areas where the trend is not fully discovered, or it has gone through that hype curve where the potential for long-term growth is there, but the crowd is not really anticipating or exciting. They are underestimating the growth. With valuation, the second part that we get is how much weightage we should put in the portfolio for that company. If the upside is much higher, that is, valuation is attractive, we put a higher weightage on that company in the portfolio.
So Nimesh, could you tell me how different is Megatrends from the index?
Oh, that is a very interesting question. Let's see how the index works first. Index typically is backward looking.
Sure.
It looks at businesses which have been winners in the past. And that's why they are at a large size, and then they are included in the index. Some of the IT companies actually came into the major indices in the year 2000. A lot of infra property companies came into the index in 2007, much after they had become multi-baggers. And index also treats losers the same way. If the company has been losing for many years, ultimately it becomes a smaller size in market cap and it is taken out of the index. Some of the infra companies, these companies which corrected by 70-80%, ultimately went out of the indices in 2011 after 3.5-4 years of extreme pain for the investors. So index is typically backward looking. If you want to look at future winners, you need to have Megatrends, which actually focuses on looking forward at which are the companies which will be future winners and losers, and marks them from there. In a way, you can say in many of these Megatrends, you will find companies that will ultimately come into the index. The other way is, index is market cap or free float market cap weighted. Megatrends investing actually aligns or assigns weight to the company based on their return potential or their valuations. So that's how it is better than index, because it is forward looking and it puts the right weightages based on the potential of companies rather than their size.
Very interesting. So, Nimesh, I have one final question. I'm sure our audience would love to know, given the strong performance of Bajaj Finserv Flexi Cap Fund in the last 1 year, what are the kind of megatrends that we are investing in?
There are very exciting opportunities at this stage in India. We are talking about this decade being India's decade, and there are many trends which are very exciting to invest in, which have a lot of growth potential within the overall basket. A couple of them I'll mention. So one of them is financialization and digitization, where you see uh, increasing investments towards, say, financial savings compared to physical savings by the crowd. That is leading to some of the capital market businesses doing well, uh, say banks and financial services doing well, insurance companies doing well. So these are the exciting spots. And in India, compared to some of the other markets, you are seeing financials at the cutting edge of innovation also, in terms of it's not the fintechs just like doing good business, but it's the banks and financial services companies actually being ahead in digitization and adopting technology. So that's a mega trend that we are excited about. The other trend is of a very defensive looking sector, which is pharmaceuticals.
Okay.
Contract research and manufacturing or custom drug development is an area which is very exciting for growth right now. Especially there are regulatory changes which are impacting this. We are seeing US talk about the Biosecure Act, where they want to reduce their dependence on China for a lot of drug development and clinical research or contract research. So this is going towards India, because India is again best placed, like in IT in the 90s, where this business can be done in a fantastic way. Third, if you look at economic changes, we are seeing a sharp rise in per capita income, more young population participating in the workforce, so household incomes are growing faster. We are seeing premiumization, lifestyle spending by the consumers, and that upgrade is leading to benefit to so many companies in the consumer discretionary sector. The last one I'll highlight is real estate. Real estate typically has a cycle of 7-8 years.
Right.
In the last few years, especially in the last decade, what we've seen is consolidation within real estate. So number of developers have gone down. Branded developers or developers which are large have actually gained market share.
Right.
Last year, we also sold the largest number of houses ever in the country. And in fact, we are surpassing only this year then. That means there's a benefit to a lot of these listed property development companies. They are also benefiting or helping the downstream players, which are into sanitary ware, ceramics, wires, cables, consumer discretionary like white goods and so on. So that's an exciting theme that again we are looking on. Oh, I must actually add one more. Power sector in India. Within infra, we are excited about the power sector and the renewables opportunity, especially here. You will find in our portfolio, we have a investment in some of the most significant power-related players in the country. And those companies are seeing fantastic growth. They have visibility for the next 3 to 5 years in terms of revenue and profit growth. And we have invested at the right valuation with them.
Wow, that's really interesting, Nimesh. I think it's only a matter of time before Megatrend investing becomes mainstream and the whole industry is adopting it, because I think the science and the logic is there to be seen. And for our audiences, if they'd like to know even more about Megatrends, we have a book authored by Nimesh that's available for download on our website. So thank you once again, Nimesh, for taking the time, and I'll leave you to now going and actually investing in Megatrends. Thank you.
Thank you. Pleasure, Roy. Thank you so much.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.